Welcome to episode number 2 of the Thimbleberry University podcast. I am John Jagay, joined again by Amy Walls. Welcome, Amy. Good to be back with you.
It's good to be here, too. Thank you.
So today I want to talk about insurance, and a lot of times clients come to an advisor expecting to talk about investments. Why do you end up talking with clients about insurance?
I think some of the confusion with why people don't expect to talk with an advisor about insurance is simply the idea of brokers and advisors and not understanding the difference. A broker is just going to talk to you about investments, where a financial advisor is looking at your overall situation. And for us, we do comprehensive financial planning. So we go through all aspects of a client's life to determine where they're at now and where they want to go and what needs to happen in there. Our work with clients is all about how they reach their goals. And the reason that we talk about insurance is it's much like here in the Pacific Northwest, if we decide to go hiking for the day.
Okay.
We need to be prepared. We may be planning on the day, on just being out for the day, but we may get some bad weather. We need to make sure we have extra water. We have extra food. We have to plan for the emergencies.
You got to have that poncho ready because it might rain.
Absolutely. Our discussions with clients around insurance is really about planning for the rainy day, being out a little later than we expected. When we are looking at a comprehensive plan, there's kind of a hierarchy of needs. The bottom of that pyramid is cash reserves, cash flow, making sure debt's managed well, and it's protection planning. And insurance is that protection.
So if you have a situation where some emergency problem comes up, you have that money, you have that cash reserve in case you need it. We hear those numbers all the time about the vast majority of Americans could be sunk by an emergency $500 car repair. So that makes sense at the bottom of that pyramid to have that cash on hand for an emergency.
Yep. There are some people that think maybe having the cash reserve isn't that important, but having a cash reserve is a protection plan.
So Amy, with insurance being protection for these types of things, what are the kinds of insurance that you would expect to look at for your clients?
Good question. And I want to be clear, it's not insurance that an advisor is looking at. What we're looking at is how we fill and help a client fill the gaps and cover risks that they have, whether that's because there may be a risk to their family if they die prematurely or if they can't work. So the different kinds of insurance that we might look at in trying to transfer that risk to someone other than the client would be life insurance. Especially if someone has a young family at home and, as I mentioned, they die prematurely. For clients who are older, it can actually be a great way to execute on their estate plan. And what I mean by that is insurance pays out tax-free. And let's say somebody has a beach house that they want to pass on to their kids. The kids may not be able to afford the taxes or upkeep, and they want to keep that in the family. Well, then insurance is a great way to provide the cash flow so that the kids can take care of that. There's also lots of different types of insurance. There's term insurance, which is good for a temporary need. There's also permanent insurance, which may require, in certain types, a lot more cash flow. That can be very powerful, but it can also be very dangerous. Another form of insurance that we may look at in order to transfer risk is disability insurance. This is protecting your ability to earn an income. And I think, if it were legal and we, could have a money machine that pumped out currency in our basements, we'd want to protect that machine. Well, we are our biggest asset and we are that money machine. And so protecting that income is important. Another form of insurance that we look at is long-term care insurance.
I think that's important, Amy, because we hear so many times about the skyrocketing cost of long-term care and healthcare, particularly if somebody's hurt or injured, or as they get older, they retire, they have a number of health issues. There's 8,000 diseases that somebody could fall victim to that may or may not be fatal, but they're chronic sometimes. And so many times, people unfortunately bankrupt themselves paying for healthcare.
Absolutely. It is very expensive. Currently in Oregon, average nursing care costs are over $9,000 per month. It's really expensive. And bringing someone into your house is just as expensive, if not more so.
Agreed.
You have to be prepared that you don't know what will happen and what those costs will be. So transferring that risk is one way. Long-term care insurance has gone through a lot of changes. It used to look one way. You can still get policies like that. Now there's a lot of things that are hybrids where you can kind of kill two birds with one stone, give you a little bit more flexibility. I think the thing to know is that no solution is perfect, whether it's life insurance or disability insurance or long-term care. But the goal is to keep you or your family members from running out of money.
So important. And I realize, unfortunately, you and I had talked off air about this. You do have some personal history with insurance, right?
I do. My father passed away when I was 6 years old, and he and my mother had recently divorced. My mom had also recently re-entered the workforce. And when he passed away, luckily, he did have life insurance. And my mom had the strength and foresight to put much of those proceeds into a trust for my brothers and my college education. It let us get through college without student loans. And I mean, that's an amazing gift that she gave us.
I give a lot of credit to your mom because I don't think many people in that situation, to your point, would have had the strength and foresight to think to do something like that. And it turns out it paid dividends for you and your brother.
Absolutely. It wasn't easy. Money was definitely tight growing up. You know, she was raising two kids on her income and it wasn't high. We actually qualified for free lunch at one point. So because of that experience, my takeaway is really that life insurance is about survivors. And I think sometimes people think that the idea of life insurance is that someone will profit from your death. And the death of a spouse or a parent, it's traumatic.
Yeah.
And having life insurance really gives people the space to grieve and maybe have opportunities that they wouldn't otherwise. It really takes the pressure off, I guess, is what I'm saying. And given my experience and now, you know, being married and having children, I know that if I were to pass away tomorrow, my kids are going to miss out on quite a bit. And I don't want the fact that I'm not here to be harder for them than it needs to be, or for my spouse. And so life insurance proceeds are a way that I can not make them whole. There's no way to do that. But at least I can give some extra flexibility to alleviate some of the pressure that me being gone would cause.
That is such an important point. I think sometimes people who have not been through an experience like that do fall into that trap of, you know, profiting from insurance and things like that. But you've lived it, you know, and there's no amount of money that is going to change the experience. But if there is money that, like you said, allows space to grieve and you have one less thing to worry about as you go through the grieving process, it can be so incredibly helpful in an otherwise just awful situation.
Yeah, it really can make a big difference. I've never heard of anybody getting a life insurance check and saying, this is too much money.
And I believe you actually have a story about disability insurance too, right?
I do. And I'm going to date myself on this one. I've been an advisor since 2003. And before that, I was in nonprofit fundraising. When this happened, I was single, and insurance, especially disability insurance or protecting my income, was the last thing on my mind.
Sure.
But I woke up in the middle of the night with a pain in the right side of my hip. And a week later, I ended up having an emergency appendectomy, except it wasn't my appendix. I ended up being diagnosed with Crohn's disease, which really makes me uninsurable from a disability standpoint.
Right.
Yeah. The good news is I don't have to deal with it on a daily basis. I mean, deal with the Crohn's disease on a daily basis, like a lot of people with it. I get to live a normal life, but it does impact me and my family if something did happen to me. So not being able to protect my income definitely impacts my family's long-term goals. Earlier, I talked about this idea that insurance is a way to transfer risk. So you either keep risk or you transfer it. In our financial puzzle, what this means is that I have to maintain that risk, but we have to look for, smart ways to do that and make up for the fact that I can't transfer it.
Got it. And this seems like a silly question, but I'm going to ask it anyway. Does everyone need insurance?
No, they don't. It's not really a silly question.
Okay, good, because your answer surprised me a little bit.
No, not everybody needs insurance. And I really wish no one did. Insurance is a tool. It's much like having that poncho when you go hiking or the extra water and extra food. They're simply tools to help get you through what you're doing. And if you're going to take the time to plan for your financial future, then making sure that you know what the gaps are, meaning what if you can't earn an income? How will retirement look? and how will that change? What about if your kid's education, what will happen to that? What I think the takeaway is that if you're going to plan for your future, you have to not just say everything's going to go right. Right? My kids' education, that's important to me. But if I'm not here, I want them to still have that. So insurance is simply a way to say, yes, I'm planning for these goals and I'm talking about this with my advisor, how I want to reach them. But let's look at if things don't go perfect. Let's look at if the inevitable happens. And planning, because we're doing comprehensive planning, really is about making sure we've dotted I's and crossed T's so that if things go right, great. And if they don't, you also are going to get the outcome you're wanting.
And so that planning just includes protection at that point.
Absolutely.
So insurance is certainly an important part of a financial plan, and I'm glad we covered a lot of ground with this today, Amy. If somebody wants to contact you at Thimbleberry, what is the best way to do it?
Give us a call at 503-610-6510 or go online to thimbleberryfinancial.com.
All right. Thanks for the time, Amy. We'll talk to you for our next episode.
Sounds great. Thanks.
Registered representative. Securities offered through Cambridge Investment Research, Inc., a broker-dealer, member FINRA, SIPC. Investment advisor representative, Cambridge Investment Research Advisors, Inc., a registered investment advisor. Cambridge and Thimbleberry Financial are not affiliated. Cambridge does not offer tax or legal advice. Thimbleberry Financial is located at 650 Northeast Holiday Street, Suite 1600, Portland, Oregon, 97232.